I think that's what this debt ceiling is going to be. It's going to be kabuki theater, a little throw up. And the real question is, where are we going to be a month from now? A month from now, after it's resolved, then where are 2-year rates? My guess is they may be a little higher. There's risk premiums in everything. Risk premiums in gold, risk premium in stocks, risk premium in rate structures, because we're all terrified of the debt ceiling. So if those are gone, stocks are probably a little higher, gold's probably a little lower, rates might be a touch higher, because those risk premiums will disappear. So you have, that's the very shortest term.
So you'd buy on that if you think a deal gets done?
Yeah, I think you'll have some kind of indigestion along the way, and yes, I'd buy that. Then we have, in a more intermediate basis, we have the financial cycle. The financial cycle, which is what we kind of look at internally, is the combination of the historical debt and asset valuation boom bust.
Right.
So if you think about post-COVID, we had this massive increase in debt, massive increase in equity valuation. It creates this boom in the financial cycle. That's happened in 1990, that happened in 2000, that happened in 2008. Our financial cycle, the peak of total debt growth plus stock market valuation, occurred in September of 2021. Historically, it's about a 2-year lag when that really, really bites and you go into recession. That would be third quarter this year.
Okay.
There's a good chance, based on our most recent financial episodes, there's a really good chance that we're going to be on the verge of looking like, or actually going into a recession.
But you think then the stock market's higher because it's looking out 12 months after?
Because I think, again, if I just think about this year and I think about 06, 07, 08, it doesn't mean that the stock market cannot go higher as the economy decelerates. If you just think about, if that was the last hike that we just had, the playbook's real simple. 6 months from now, stocks are 10% higher. 6 months from now, interest rates are generally 50 to 70 basis points lower. There's a halcyon period post last hike where asset prices do okay. Commodities barely recover. The dollar kind of does nothing.
I'd referenced this banking crisis that we're in. I don't know if you think it's a crisis or something else. How does that factor in? And where do you think we are?
I think that's one of the reasons why that was the last hike. I mean, this banking crisis, it's troubling to me because we just killed 3 big banks. And when I say we, I think bad monetary policy combined with bad fiscal policy created a situation that never had to happen. We knew in the fourth quarter of 2020, it was so obvious we were going to have a vaccine. But we continued with quantitative easing for an entire year after that. And the whole time, we're telling everyone rates are going to stay low forever. Inflation is not an issue. We're trying to get inflation above 2%. The banks, anyone that was listening to our Fed at that point in time was probably doing exactly what these banks did, extending maturities, because they were being told that inflation didn't exist when it finally did come as transitory and rates were going to be low forever. We did not have to have all that overstimulus, and then all of a sudden we found out inflation wasn't transitory. They had to course correct a over-exaggeration of what they were doing in 2020 monetary policy.
Okay, I got a different one for you. Bitcoin. You came on our air during the early part of the pandemic. I think it was trading at $8,000, $9,000 a coin. And you said, I'm in. And I think you rode it all the way up to 60 some odd $1,000. And we then rode it back down to $15,000, and we're now sitting, I think, somewhere around $27,000.
I've never sat on a horse that long, just so you know.
So what's you're still on the horse, though?
From the beginning, I've always said I want to have a small allocation to it because it's a great tail event. It's the only thing that humans can't adjust the supply in. So I'm sticking with it. I'm going to always stick with it as just a small diversification in my portfolio. What do I think right now? I liked it last December. I still think I mean...
Would you buy more right now?
Would I buy more? I would probably... I look at it in gold, and I think they've done so well recently because of the fact that we have had these great risk premiums. I wonder whether they may not be boring in the future.
Right.
Also, Bitcoin has a real problem because in the United States you have the entire regulatory apparatus against it. So it's just kind of yesterday's news. And if inflation's truly done a bit, if that story's been played, then you have to wonder. We were buying gold and Bitcoin for the inflation hedges. That game may be over. I would, in 6 months ago, before AI, before the possible productivity boost that we'll get for it, I would have said a completely different story with regard to the inflationary future and with regard to all the inflation hedge.